There is a tax being collected from you right now, not by your government, not by your employer, by every digital platform you use to build your income, your audience, and your business. And unlike income tax, which arrives with a bill, a deadline, and a legal obligation you can see and prepare for, this tax is invisible. It does not appear in your bank statement. It does not show up in your accounting software. There is no form filed on your behalf. And yet, it is being collected from you every single day with compound interest. Here is what the collection looks like in practice. YouTube keeps 45% of every dollar your content earns. You keep 55%. That is not a partnership. That is a landlord arrangement. Apple takes 30% of every transaction processed through its platform. Google takes 30% on revenue above the first million. Both reduce to 15% only under specific conditions that favor the platform, not the creator or the developer. Meta owns the relationship between you and every follower you have ever built on Facebook or Instagram. If they change the algorithm tomorrow, and they will, your reach disappears overnight. The audience you spent years and thousands of dollars building becomes inaccessible without paying for ads. Chicago became the first city in the world to introduce a social media amusement tax, effective January 1st, 2026, taxing platforms based on user engagement data collection. Multiple US states are following, with digital advertising taxes ranging from 3% to 10%. The governments have noticed what the platforms built, and now they want their share too. The silent AI tax is not a single payment. It is a system, and you are inside it. This briefing is about how much it is actually costing you, and the precise coordinates for stepping outside it. Before we quantify the tax, let us define it precisely. Because the word tax implies something you can calculate and pay and be done with. The silent AI tax is different. It operates across 4 dimensions simultaneously, and most people are being extracted from in all 4 without knowing it. Dimension 1, the revenue split. This is the most visible layer and still the most underestimated. YouTube keeps 45 cents of every dollar your content earns through AdSense. If you are generating $1,000 per month in ad revenue, which requires significant audience size and production consistency, YouTube has already collected $450 before you see a single cent. At $10,000 per month, a milestone most creators treat as financial freedom, YouTube's share is $4,500 every month, forever. Over a 12-month period at that level, YouTube collects $54,000 from a creator who believes they have built a sovereign income stream. They have not. They have built a revenue share arrangement with a landlord who controls the property, the distribution, the monetization rules, and the eviction policy. The architect notes this and builds accordingly. Dimension 2, the attention tax. This dimension is the one that costs the most and leaves the least trace. Every platform is engineered, at a fundamental architectural level, to maximize the time you spend on the platform, not to maximize the value you extract from it. The average person spends 2 hours and 27 minutes per day on social media platforms, according to 2025 data. At a conservative professional value of $25 per hour, that is $61.75 per day extracted in pure time value. $432 per week. $18,845 per year, paid in attention, collected in engagement, returned to you as approximately nothing. The content you consumed did not make you more productive. It did not build your business. It did not move your income. It moved the platform's advertising revenue. The attention tax is the most expensive tax most people pay, and the one they volunteer for most enthusiastically. Dimension 3, the data tax. This dimension is the one the platforms least want discussed. Your behavior, your preferences, your purchase patterns, your location history, your relationship network, your content consumption, all of it is being continuously collected, processed, and sold to advertisers and data brokers at a scale most people cannot comprehend. McKinsey estimated that personal data is now worth between $100 and $1,000 per user per year to the platforms that collect it, depending on the demographic and the precision of the behavioral profile. You are not the customer. You are the product. And the product is being sold continuously without your participation in the revenue. Dimension 4, the Infrastructure Dependency Tax. This is the dimension that the previous three are building toward. The more of your income, your audience, and your distribution that sits on platforms you do not own, the more you are paying an ongoing dependency tax that compounds every year you do not address it. A creator with 100,000 YouTube subscribers and no email list has built an asset on rented land. YouTube changes its monetization policy, as it does regularly, and the asset depreciates overnight. YouTube demonetizes a channel, as it does without warning or appeal, and the income disappears with no recourse. YouTube's algorithm shifts toward a new content format, as it does with every major product update, and the reach that took years to build drops by 40%. The dependency tax is not paid once. It is the cost of operating on someone else's infrastructure indefinitely, and it compounds every year the architect delays building their own. The real cost calculation. Let us run the numbers that the platforms do not want you to run. Take a creator or business operating across the standard digital stack in 2026. YouTube revenue share, 45% of all ad income. On $10,000 monthly, $4,500 per month extracted. Platform advertising spend to maintain reach on Facebook and Instagram. The average small business spends between $1,000 and $3,000 per month just to reach the audience they already built for free. Because organic reach on meta platforms has collapsed to under 5% without paid amplification. App Store fees, 30% on every digital product sold through Apple or Google. On $5,000 monthly in digital product revenue, $1,500 per month extracted. Attention cost, 2 hours daily at $25 per hour professional value, $1,500 per month. Conservative total monthly silent AI tax on a mid-tier creator or small business, $8,500 per month, $102,000 per year. That number is not theoretical. It is the cost of operating as a digital tenant in the platform's economy, rather than as a sovereign architect building your own. The silent AI tax is not inevitable. It is a structural choice, and it can be reversed with 3 precise moves. Exit 1. Own the audience relationship directly. The email list is the single most important asset any creator or business can build in 2026. Not because email is glamorous, because email is sovereign. No platform controls it, no algorithm filters it. No policy change can demonetize it. When you own the email relationship, when the subscriber chooses to give you direct access to their inbox, you have exited the attention economy and entered the sovereign economy. Beehive and Substack allow you to build this asset starting today at zero cost. The architect who has 10,000 email subscribers and 10,000 YouTube subscribers has 2 fundamentally different assets. One is rented, one is owned. Build the owned asset first, always. Exit 2. Build platform-agnostic income. Digital products sold through your own store on Gumroad or Lemon Squeezy remove the 30% platform tax entirely. A $100 digital product sold through your own distribution channel returns $97 to you after Gumroad's 3% transaction fee. The same product sold through Apple's App Store returns $70. The difference, $27 per transaction, compounds into thousands of dollars per month at meaningful volume. The architect prices this difference into every product decision. Exit 3. Time sovereignty. The attention tax is the most personal exit because it requires confronting a behavioral pattern most people mistake for productivity. Consuming content about building a business is not building a business. The architect allocates time with the same precision they allocate capital. 2 hours per day redirected from platform consumption to sovereign asset building, email list growth, digital product creation, automation deployment, client delivery, represents $18,000 per year in recovered professional value. That is not a motivational calculation. That is an accounting entry. Let us read the full map. The silent AI tax operates across 4 dimensions simultaneously. Revenue splits that extract 45 to 30% of every dollar earned on platforms you do not control. Attention collection that extracts 2 to 3 hours of daily professional time in exchange for content that serves the platform's advertising model, not yours. Data extraction that monetizes your behavioral profile at between $100 and $1,000 per user per year without your participation in the revenue. Infrastructure dependency that compounds every year you delay building sovereign distribution, sovereign products, and sovereign audience relationships. Conservative annual cost for a mid-tier creator or small business, over $100,000. The 3 exits are not complicated. Own the email relationship. Build platform-agnostic product income. Reclaim your time as a sovereign resource. None of these exits require you to leave the platforms. They require you to use the platforms as a distribution mechanism rather than as your infrastructure. The platform is the road, not the destination. The sovereign architect builds the destination. 90 days, 3 exits, full deployment. The silent AI tax is being collected whether you act or not. The only variable is whether you notice it in time to stop paying. Drop a comment below. Tell me which of the 4 dimensions of the silent AI tax is costing you the most right now. Revenue split, attention, data, dependency. 1 word. That comment is the most honest audit most people will ever do of their digital economy position. If this briefing gave you a number you could not ignore, subscribe. Every week on this channel, we declassify the invisible systems extracting value from the architect community and hand you the precise coordinates to exit them. Share this transmission with one creator or business owner who is still measuring their success by platform metrics they do not own. They are paying the tax. They do not know the exit exists. Subscribe. Deploy your exit. Transmission concluded.